So you started trading when you were 11?
I did a lot of lawn cutting, $10 to $15 a lawn, or I could go out and sell a covered call and maybe make 80 or 100.
That's impressive.
Have about an 87% success rate over about 30 years.
We're not talking about a small amount of money.
I try to trade for base hits.
That's really how you build wealth. He's been able to generate plus 25 or 30% return for most of the last 7 years. All right, welcome back, everybody. This is another rising star. And today is going to be a fun one because I've known John for quite a while. John, welcome to Tasty and welcome to the Rising Star Shoot.
Thank you.
I mean, I've met you once before. We went out to lunch a couple of years ago in Atlanta, and I did a show down there at the
Varsity.
At the Varsity, right?
Yeah.
At the Varsity.
Yep.
What do you have?
What do you have? What do you have?
Yeah, what do you have? What do you say? Wasn't it like, yeah, crazy. Anyway, but the fun thing is, we've stayed in touch over the years and through lots of emails, and I'm an email junkie. You're a pretty good email junkie yourself. And we have, followed each other's trades and talked about trading for years now. So I have a pretty good idea of who you are, but we're going to introduce you to all the Tasty Nation. And your story is a really fun story. I have to start off this thing by saying I wanted to title this The Crocodile Hunter because you're the only person I've ever met that's actually hunted a crocodile. I don't know if that's good or bad, but I live in the city here and we don't have a lot of crocodiles in downtown Chicago. We have other problems, but we don't have crocodiles.
Well, it's something I've always wanted to do. It's kind of out there. It's a risk project, and something I thought would be fun. Same with the pythons.
Yeah, you're a python hunter too. That to me seems just insane. So I can't even, I can't rationalize hunting for pythons. So I'm not even going to go there.
Yeah.
Because I can't figure that out at all.
In the non-financial stuff, I like a little more risk. So the hunting of the alligators and pythons, when it comes to, you'll see when we talk, with the quite risk adverse when it comes to investing, though.
I find that to be very strange that you're willing to go out and hunt a python with your bare hands or a crocodile with your bare hands, but you're uncomfortable selling a naked call or put.
Oh no, I'll do that, but there's have to mitigate the risk.
Oh, okay.
Yeah, I'll talk about it.
Okay. Anyway, I find that kind of fun. Anyway, but the other side to this is that the angle that I want to take with you, and I hope you're okay with this, is you're 55. You're 12 years younger than me. And we've been trading about the same amount of time. 44 years for both of us. You started when you were 11, which I find pretty incredible. I didn't start till I was in about, early 20s. I didn't even know about trading before that. But we've both been doing this a long time. And I think that the real story here is longevity. And I've always been one that goes around talking at different seminars and entrepreneurial events and different business stuff. And I like to preach that there is a very tiny difference between success and failure. And the most important aspect of success is longevity.
Mm-hmm. I agree 100%.
And you're my proof. You're my walking, talking, proof of this.
Yeah. So you'll see, if you go on YouTube, you'll see a lot of trade for 30 minutes a day and drive this Lamborghini.
Oh, sure.
Yes.
Yeah.
That's not me. It's not how things work.
Well, it's not anybody. That's not the real world. I mean, there's 6 outlier cases, guy, Mark Zuckerberg starts company when 22 turns into be worth, $1 trillion. There's not a lot of cases like that.
I try to trade for base hits or doubles. I'll take the home run if it comes, but sure. I don't trade for it. I'm a trade small, trade often.
Like trader?
100%. I've been trading for, when I was 11, my grandfather was an options trader. He traded a lot of options way back before there was online anything.
Yeah, I'm sure.
So I remember being at his house, would go through the newspaper, and I probably haven't touched a newspaper in 30 years. I don't know about you, but we'd go through the newspaper, look at stocks, look at option prices, We used to have these big books, like I think it was S&P or someone that would leaf through these.
Value line.
Value line. That
Value line.
and they would be like 3 months old, but you could see charts and
Yeah.
and a little bit of ratios in there. So, of course, at 11, I wasn't trading strangle.
No, of course
spreads.
not. No.
It was mainly buying calls and selling covered calls.
Oh, okay.
So I did a lot of, at that age, say like early teens, I did a lot of lawn cutting. So $10 to $15 a lawn, or I could go out and sell a covered call and maybe make 80 or 100, and it was a lot less work. Now I did both, so I would do the covered calls and cut grass because there's something fun about cutting grass. Then I always had a penchant for investing, so I became a Series 7 broker at 18.
At 18, you can become Series 7.
You can.
Who would register an 18-year-old? Oh, that's crazy. And so before you went to college, you got a Series 7? Or around the same time?
At the same time. Yeah, about the same time.
That's kind of crazy. So you undergraduate degree and graduate degree both in finance, accounting,
That's right.
taxes, that kind of stuff. So your professional career was in, let's call it financial accounting. I mean,
Financial accounting, a lot of business consulting, business process improvement, all that type of stuff. And that brought me up and down the East Coast, and then for the last couple decades overseas. And we've been
okay. So you grew up in Florida and you end up all around the world doing financial consulting, tax consulting, and everything else. But you're trading primarily that whole time in U.S. markets?
Yep.
Or
always U.S.
always U.S. markets. But you taught yourself lots of different languages.
A few.
A few.
And I'm not good at any of them. I barely know English.
You were learning about business all over the world. So you have a probably a different perspective on what U.S. market structure is, and how businesses run in a kind of in a free market as opposed to businesses running in, maybe let's call them
Non-free markets.
non-free markets. Right. And that probably gave you a pretty good appreciation for what we have here.
It really does, because from the U.S., of course, it's the SEC and those. It's kind of a double-edged sword. You don't want all the regulations, but you also want them. It gives you the disclosures. It protects the individual.
You want the integrity. You want marketplace integrity. You would prefer to have less regulatory limitations and fences. Yeah.
And there's a fine line depending on what side of the fence you're on.
Yeah. And we've been challenged with this and and debating this forever. We had the debate this morning actually on air, same type of thing. As we get towards tokenization and things like that. So throughout your entire professional career, you're trading, but you're not necessarily trading, complex option strategies. You're trading. You're just trading stocks, you're trading futures, you trade everything, right?
Yep. Product indifferent.
But at some point, how'd you find Tasty?
About 6 years ago, I was looking for ways to improve my trading. I did really well, have about an 87% success rate over about 30 years.
But just understand that an 87% success rate does not mean an 87% return. I don't agree with that.
Yes. Yeah.
Like I have a very high success rate, but a lot of times it doesn't mean, because I like to do high probability trades where you're going to be successful most of the time.
Right.
But it doesn't mean, it doesn't translate to it necessarily to a return. Just want to be clear.
Yeah, 100%. As a goal, I try to have around 3%, so 40 to 50% a year. But that's
a goal. That's an objective.
It's a goal.
Yeah.
And the 87%, it might be a little bit too risk adverse. Maybe, but it works. But like when I do futures, it's like 55%. So I'm not as good as with commodities as I am with the stock options.
Yeah.
But I've traded, as you know, in a bunch of oceans in the middle of the ocean.
Oh yeah.
I've traded on all the continents except for Antarctica, but I'll be there later this year, and I plan to put a token trade on there. Hopefully I get some.
So some people like to do marathons in all 7 continents, and I don't see you as a marathon runner, so I'm going to guess that you want to be trading in all 7 continents.
Yes.
Yeah. That's kind of cool, though.
I probably have traded in 100 different countries as well.
That's impressive that you've even been to 100 different countries. Do you have anybody in your world that does what you do? Do you have anybody to talk to?
I have a couple people that I know.
A couple people.
Yeah, yeah.
But it's a small universe.
It's a very small universe.
Okay.
And it's always been like that.
Okay.
Because if you go to a party or something, oh, what do you do? Oh, I trade stock options. And then you get the fuzzy.
Yeah, you get the glassy eye look, yeah. And so, what about your wife? She think you're crazy?
Yeah, you know how it is being married to a trader. So, for your wife, well,
I don't know how it is being married to a trader. I know what she says about me, but that's yeah.
it's you know, one of the toughest things is to not be emotional when you're making a trade or a trade goes. Everybody can put a trade on. It's how do you manage it when it goes.
You don't seem to be. You seem to be emotionally pretty even.
Yes, but if something really goes against you and you've taken a position that's too big.
What about when things get like? How did you do on, August 5th this year, or the week ago, Monday, whatever it was? We opened down. Was that this Monday? Can't remember. It might have been this Monday. We opened down 140 points in the S&Ps.
Right. Well, there's a little bit of that anxiety on the futures on Sunday night where you go, oh boy, Monday might be really difficult. And
so you're a junkie. Do you have to watch the market when it's open or
try not to. I try to keep business hours, let's say, for the markets, and not have it spill into the rest of life. It doesn't always work, but that's what I'm attempting.
Business hours are, by the way, from Sunday night at 5 o'clock till Friday at 5 o'clock. Those are business hours.
I mean, make no mistake, it's there's a few trading hours that you really are trading, but mentally it's 20 hours a day. Right? I mean, it's just how it is. And I think anybody can trade. Anybody can learn how to trade. If I could do it, I think I'm not real smart. I mean, sure, I'm just an average guy. People can trade it, but can you do it over the long term and you don't blow up your account? That's
the whole longevity thing. That's the 44 years of this. How many hours a day are you in front of your screen?
6.
6 hours a day in front of your screen.
Yeah, 5. Yeah.
Okay, that's legit. That's like Tom hours. Like those are like.
Well, I enjoy it. What else would I do?
Those are dog hours. Those are like that's junky stuff.
Yeah. What concerns me is, okay, I've been doing this for 40 years. Well, how many more years do I have? Can I do it for another 20? Probably not another 40. So it's a strange. And I don't know if you thought about that yourself, but what do you do? And
I don't think about it because I don't want to know. Like I don't want to. I mean, I'm always reminded of the story of when years ago when we first built Thinkorswim, there was one of the original guys that started the CME, one of the first, I think, 5 members of the CME. He's about mid-90s, and he was the uncle of a buddy of mine, and he was still trading in his mid-90s. And we had a walk-up. Our building was a walk-up, and he came to the office, and he's couldn't make it up the stairs, so one of the guys on the trade desk carried him upstairs because we didn't have an elevator at the time. And he was still trading in 95, and he was my inspiration because I'm like, and he's sitting on our trade desk, with his own account open, going, yeah, sell this. He was still trading basically every future on the CME, and I'm watching this guy, and I'm like, okay, that's what I'm doing. Like, he could do this in 95. You got an oxygen tank there. I'm like, I could do this. Like, I see myself in the exact same, doing the exact same thing. He was bitching and he was, yelling at the screen, and I'm like, that will keep me alive.
Funny. Well, I'm teaching my mom how to trade. So she's 80. She does uncovered puts and sells covered calls.
There you go.
By the way, I'm a genius, she says.
She has no choice at this point. She's not having any more kids.
She's happy.
Yeah.
She was making money.
She's making money. bull markets make geniuses out of their sons. Of sports. And so, but you were always a genius. Now you're more of a genius.
Everybody makes money in bull markets.
Yeah. Does it lead to anything else that you do? Like, I mean, I'm just saying, you know, are there other hobbies, occupation, anything else? Does it help with, you know, the consulting work and other things that you do?
Well, but one thing that it does help a lot with is trading in general allows you to look at data information quickly and make a quick decision, and then you stand behind your decisions.
You know, CPAs by definition are not really risk takers.
Right.
They're much. It's the analytical part. Yes, the risk taking part is sometimes, you know,
Right. Exactly. Yeah. Atypical and that.
the probabilistic side, I think, is easy to understand. I think the speculative side is a little more challenging.
And you might find this too, after I'm trading, I have all my screens and everything's flashing and boom, you're done for the day. And then you go out in the real world, you have to turn off that emotionless trading, everything fits in a curve. And now you're in this environment where it's like emotional, and you got to not be analytical. You got to be more.
You have to try to be normal. We call it being normal.
Right,
Yeah,
be normal.
You have to talk to real people and try to be normal. I remember trading the day of the crash in 1987, and it was one of the wildest days of my life. So I remember it like it was yesterday, and I left the trading floor a little after 3:00 Central Time when we shut down, and I went upstairs to the office, and it was almost like a ghost town. Everybody had left, and it was just kind of scary. And then I drove home and stopped at a hot dog stand, and everybody was normal. And I was like, what the F is going on here? Like, does anybody know the stock market crashed today?
Yeah.
And nobody cared.
Well, I use, honestly,
And nobody cared.
Funny you say that, because I use that as a litmus test. Is
We see it and we feel it, and
Yeah.
and if you go out in the normal world and nobody's thinking of it or no one even mentions it, any day, even like Monday where it was real crazy, like, nah, I guess it's not that big of a deal. Now, if it gets to 2 days, 3 days, 4 days like that, then people and the news media picks it up and then everybody talks about it. Then it might be a bigger deal. So I use that as my little bit of a reality check of don't get too worried about or too excited about things.
Do you ever think, because of all the traveling you've done in your life and, you know, trading from 100 different countries and all that kind of stuff, do you ever think that, like, you have a different perspective, like you think about things differently, like currencies and precious metals and things like that? Or does it all just has it all just become a numbers game now?
Culturally, I hope I understand and appreciate different cultures, foods and people and strings, ideas. But when it comes to financial instruments, I think it's pretty just, it's right there.
It's pretty much numbers.
Yeah. It's just
I
numbers.
got it. What's the worst trade that's gone against you recently?
Probably Tesla.
Tesla.
Yeah.
And you were short it.
Yes, I was short. I was short on Tesla.
Yeah.
But it's also my best trades is Tesla. I'm all over the board. Tesla's my biggest trade.
Trading the vehicle, because it's, well,
There's a lot of juice on there right now.
yes, and Tesla is either the most liquid or the second most liquid underlying to trade. NVIDIA is number one, Tesla's number two. So the reality is that, sure, makes sense.
So like, for instance, with Tesla right now, I have strangles, I have a call butterfly, I have naked puts, and it's not capital efficient, I know, but I will buy the stock and sell at the money covered calls just for the week. There's so much premium in that. And then the stock generally get taken from me, and it gives me about a 3% return a week.
I mean, if that works, it's amazing.
it's not, I know it's not efficient.
Yeah, I know.
But it's like, if there's a little extra money, I'll do that.
Okay. Yeah, for people that are inherently bullish in Tesla, that's a reasonable way to play it. So what happens when a position doesn't work? So you do a covered call in Tesla. Now the stock goes lower. Now what do you do?
For instance, Tesla went lower this week.
Yeah.
I had covered calls. I rolled the covered calls down.
Yep.
Get more juice.
Okay.
Higher delta. I'll keep that premium this week, more than likely. Now have the stock, because it won't be taken from me at my strike.
Probably not. Tesla's like,
But it jumps all over.
Yeah.
But if it doesn't, I'll just keep the stock, and Monday morning I'll put on new covered calls.
just roll new covered calls.
Yeah.
Yeah. Okay. Is there any part of the trading world that kind of where you at this point you feel like I still don't get this? I don't really understand this. It doesn't make any sense to me. Or does it all kind of make sense? I mean, you own everything you do now.
From a accountability standpoint?
Yeah.
I own everything I do. Make very quick decisions, and you have to live with the decisions you make.
Oh, for sure.
Yeah, 100%. It's all on me.
So what do you do when something goes against you?
Look at the delta, look at the profit loss, roll down, roll out,
Yeah. And
reduce size.
how often do you reduce size?
Well, this might be a little bit of an oddity for me.
Try me.
I don't trade from a definitional standpoint of large enough. My net lick is here, and I'm trading here, and so
What percent of your net lick do you use most of the time?
it's too low.
It's too low. So you're saying you're like under 35%?
Yeah.
Okay. So that's okay.
2 years ago, I doubled my contract size, my Nomad tranche, and then this year I went up another 50% because I need to trade bigger.
Got it.
And I know most people are.
That's a high class problem, by the way. But
Well, most
that's
people have the other way. They're trading way too big, and
I mean, in the whole world, most people have a get rich quick mentality, which forces them to trade, to do everything too big, and it usually doesn't work out. You're way better off doing everything too small, proving concepts, and then scaling up like you're doing.
well, even with the zero DTEs, I'm very happy taking $50 per spread.
Sure.
Or 25%, whatever. I'm tickled.
Yeah. No, I completely understand that too. A lot. Me too. And I'll do that all day long just the same way. I don't feel any, I don't care what the number is, just as long as it's a positive number. I don't care if it's $50 or $500, whatever it is. It's just positive number. So let's get into, okay, how does somebody trade for 40 plus years? And just to put context around John's account stuff, I'm just going to say that it's plus six figures to make it clear to everybody that we're not talking about a small amount of money. And also that, the targeted return for him, he's been able to generate in the, let's call it plus 25 or 30% return for most of the last 7 years. And that's impressive because that's really how you build wealth. And I'm going to be a little vague on that because I really want to get into the nitty gritty of kind of what do you do? So like, and I should say that based on our chat before we did this, you make about between 10 and 30 trades a day. Mm-hmm. Okay.
Yeah. You hit on a real slow day, 50 if there's really problems that I have to adjust.
Yeah, that makes sense. Or the market's really busy or there's lots of opportunity. And again, how much of that is in the futures world and how much of that is generally in the equity world?
Probably 80% equity.
80% equity. Well, that's very typical for a tasty trader, just so you know. Like we're 80-20, about, or 77-22, something like that.
I mean, I do a lot of, on the future side, I do a lot of bonds, currency, some corn and wheat. I'm not very good at those, but I do put those on.
By the way, nobody's very good at those. Yeah.
And on that market, there's such big products on the future side. I trade generally spreads.
Sure. Whether it's a future or it's an equity, the strategies to you, the mechanics, I mean, do you use different mechanics or the same mechanics?
Really the same. Yeah, that was something that 15 years ago or so, I started getting into the futures market. And as you know, they trade at different times, different ticks, all this weird
Nuance, no doubt, we say.
And that's why I liked your small exchange. I hope that comes back.
We're working on it right now.
But then watching you all, I decided I don't really even need to know all that detail. I'm just going to trade it product indifferent and trade with the same methodologies that I do on the option side or the equity side.
What about shorter term options, the 0 days and things like that, the 1 DT, 0 DT, how much of your trading is 0 and 1 DT?
Well, it's growing. Right now we have a pretty good VIX, right? 18 or
So yeah, a little less, right? To the
somewhere in 18.
Yeah.
So if that market dries up, the trading has to change. The style has to change. And that's always the trick, is for me anyway, to know a lot of volatility, sell premium, less volatility. When does it start moving? When does it switch into more debit spreads and things like that?
Is there a specific go-to strategy, or is there something like like I know you trade a lot of earnings, I know you trade some 0 DTs, but is there a specific kind of go-to strategy?
Well, on the 0 day, and I'm trading those more often, and you have great studies on those.
Yeah.
And so I've been trading them as the market goes up. I'm also now trading them as the market trends down, and also if it's flat. And what I do I take all the methodologies that you have, best times of the day, and those things based on volatility. But I also overlay a 513 EMA.
513 EMA. So what does that mean?
Exponential moving average.
Yeah.
And that is kind of
What's the 513?
5-day, 13-day.
Oh, okay, got it.
And so that is like the city.
See, I'm really dirty with that.
You don't do any of the charting.
No.
And I, being a CPA, I don't look at any of the numbers anymore.
Okay.
The numbers are somewhat meaningless, earnings and things like that to me. It's all about what the perception of the market's perception of.
What's the strategy? Are you you're primarily a premium seller.
Yes. Yeah.
Yeah. Okay. And are you always covered, or is there a naked side to it?
Oh, I probably do 70% naked.
70% naked. But sometimes when you trade the 0 days, you have to cover it just for capital reasons.
Yes, that's right. Yeah, there's some unique, let's say, SEC rules around that.
Yeah, that'd be the $120,000 of one lot.
Yeah,
exactly. Yeah.
So I do a lot in the SPX. So you might have a study where it says, it's the best time to buy at 10 o'clock, and I'll do a little debit spread at the money. I'll do that, but I'll overlay when the 513 crosses. Then if it's crossing at that same time, I know that's going to, I hope it's going to give a little juice.
You never know.
You never know.
You think.
But I'm trying to, even if it's a 1 or 2% more chance of it, I try to.
What's your kind of core equity strategy? Like if you had, like this afternoon, Apple has earnings coming out. Like what's your Apple kind of go-to strategy?
Well,
if you were to trade it?
What I do every single day, 100, 200, 300 times a day, is look at the stocks, IVR. That's the very first thing I look at. Then look at the volume for the stock.
Okay.
I look at the volume for the strikes.
Okay.
Then I look at the bid ask. And I'm looking for tighter bid ask.
Okay.
I look at delta, pop, gamma.
Yeah.
Theta, not too much, because that's kind of already built in.
No problem.
So I look at those things, and then I kind of look at the charts a little bit to see, am I bullish, bearish? A lot of times I'm just delta neutral.
Okay.
And that's fine. So like with Apple, there's not much juice in it today, but I probably would go delta neutral 15. If there was enough premium in it, I'd go 2 times the expected move, 1.5 times the
Expected move is like $9.
Not much interest in that.
Yeah,
It could blow through that real fast.
Right. So 2 times the expected move is $18. The premium out $18 was about 75 cents total. It's not really.
Yeah.
It's not that interesting.
But
Do you play it? IV rank is in, let's say, 70s or 80s. Do you play it?
Probably not.
Okay.
Probably not. I'd like to get a little more.
Okay.
That. Like with Meta, I had a $5 spread on, and those were like 8 or 9 delta on each side. Real far out, and a lot of juice.
Yeah. Yeah, that was a different story.
Because you can trade IBM and get upside down, right, 2 times expected move on that today.
That's right. When you start out the day and you just look at you look at the screen, you log on, you look at the screen, just say, okay, like is your thought process, and I want you to get really specific here, detail wise. Is the first thing you do adjust existing positions, or is the first thing you do go in and create new positions?
Always look at the existing.
Okay, and when you look at your existing positions, are you looking at your delta, or are you looking at your P&L?
A little bit of both.
Okay, because I'm a P&L person.
Yeah.
Because I look at my P&L first to see what's messed up, and then I look at the delta on those P&Ls to see how I have to
They
neutralize it.
generally go together.
Of course I do.
And I don't roll as much as you do, but I will roll. I roll up and down.
Okay.
And, probably 70%, like I said, are strangles. If the IVR is low, I might do a calendar, a debit calendar. You know, so IVR really drives, and that's something that I didn't have before Tasty. IVR just didn't.
Have you been able to keep your size in check? Like, what happens if you put a position on, it starts to go against you? Is your first objective to adjust the position, or reduce size, or add to it? What do you do?
Yes.
What do you mean, yes?
All the above. I try not to increase my size. The first thing is,
Yeah.
you know, it's always in my mind the reversion to the mean. So if we get a big pop up or a big pop down, like we did with NVIDIA or some, I feel like that's a little overdone. So I might lay into it a little bit more and sell more puts. Or sometimes I'll just say, well, I'm just going to hold my position and it'll float back.
And I think the longevity with the returns, it's really remarkable. So thanks for sharing your story.
Thank you. Thanks for having me in.
If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.